Your market news now. Asian shares edged up this morning while bond markets held their breath ahead of an update on the U.S. rate outlook from the world's most powerful central banker, and as the jobs report that could decide if the next hike needs to be supersized. Locally, consumer goods group ABI says it spent 22 million rand to fend off rolling blackouts in the 6 months to end December, adding to cost pressures that could not be recovered through increases in selling prices. ABI and other food manufacturers were already grappling with high input costs stemming from higher soft commodity prices, though they have since come off their highs, as well as high fuel prices and a weaker rand. To talk to us about the latest when it comes to the markets and also throw into the week, we are joined by Viv Govender, who is from Rand Swiss. Viv, thank you so much for your time. I mean, given everything that we've seen over the past week, or in fact, even over the past month, what do you make of this correlation that we're seeing between stocks and bonds?
The market is a little uncertain at the moment. The bond market is basically, pricing in a bit of pain coming through. The stock market is pricing a bit of optimism, but the pain will be short-lived. I don't think that, both can be correct going forward. If I had to err on the side of anything, I'd probably think that, the fact that we are still seeing inflation globally looking as high as it is. We had some numbers out of the EU last week that were higher than expected. We had a couple of weeks ago numbers out of the US higher than expected. That seems to indicate that, some of the expectations around interest rate cuts by the end of the year or early next year might be a bit optimistic, and that could mean that stocks are a bit higher than they should be.
So on that note, in this world of uncertainty, is cash the refuge right now?
Unfortunately not. If we are correct and inflation is still a problem, cash is just the guaranteed loser. You've got to basically take a look at what could be available out there. And unfortunately, just taking cash when inflation is as high as it is would be, I think, an error in this point in time.
So I mentioned in my intro that we had results out of Avia, but there were also other companies as well on Sense that reported their earnings. RCL being one of those particular companies. What did you make of RCL's numbers?
Yeah, look, I mean, they were as expected. The costs are coming up quite dramatically, and that's something we see across the food sector, unfortunately. This is going to be a major issue, I think, in the next little while. And that's maybe one of the reasons we're seeing the strike action happening as it is. That those cost pressures are hitting the working class quite hard, and it's making it more difficult to survive, and that's making people more likely to go on strike. If we don't see real wages, corresponding to some of the inflation increases we see coming through, obviously workers are going to suffer. But on the other hand, if wages start adjusting automatically to these inflation increases, all it does is makes inflation sticky. Because, if wages are increasing automatically as inflation rises, it just means that, expectations for future inflation is increasing, and that increases, or that basically makes inflation more likely to be permanent than not.
On that note, then, when it comes to the retailers in general, were they ever attractive for you?
Not really at this point in time. I mean, like I said, it's the pain being felt by consumers, especially for things that are basic. We're talking about stuff they really can't afford not to pay for petrol. They can't afford not to pay for electricity. They can't afford not to basically pay for rent. And they can't afford not to pay for food. Interest rates makes the rentals more expensive because obviously the cost of housing goes up. Food inflation is, as you know, is high. We had this massive petrol increase coming through recently. Electricity, of course, we're having these massive increases coming through. So right now, to basically bet on the South African consumer being, in a stronger position going forward, which is obviously what you need for retail to do well, it's going to be quite difficult.
So with some of the macro issues coming through both locally and I suppose on the US side, how has that impacted your allocation strategy?
Yeah, look, I'm looking more. I do think that maybe some of the optimism around, for instance, the rate cuts and so on, are a bit overdone. But there are sectors that already have adjusted, down. I mean, US tech is looking really attractive. I think we are the possibility of a new kind of boom coming through. I've seen some numbers around what's happening with, investments in AI companies and so on. That looks really attractive. Something similar to what we saw when the mobile, ecosphere started up, or the internet ecosphere started up, maybe 2.5 decades ago, which is quite a long time. But I think there's opportunity there. But I think right now you'd be quite brave to just go and buy stocks. On the average, you want to be picking stocks that is basically a good value right now. Buying just indices is probably not the right idea right now.
So let's bring things back locally with a lot of these South African listed companies reporting their results. Which companies, or rather which sectors, are you going to be paying attention to, and what messaging are you looking out for in the outlook?
Yeah, look, I'm looking into companies that are able to, do well. We had a Bidvest numbers coming through, excellent. Those kind of things are good. I'm looking for basically diversification, especially outside the South African economy. I'm looking for, if you're in the South African economy, what you're doing to basically alleviate, the dangers of load shedding, etc. Or if you aren't, can't alleviate it, what are you doing compared to the cohorts in your industry? Those are the kind of things I'm looking for advantages in the South African economy at the moment.
Viv, let's leave it there. Thank you so much for your time. That is Viv Govender from Rand Swiss giving us his perspective on the markets. And as he mentioned, we do have quite a few local companies reporting their earnings, and we're going to be bringing some of those CEO conversations for you for the rest of the week. However, that is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.